Hey, what's up, everybody? Welcome to the Finally Financial Podcast. Uh, this is the very first one. Got a special guest for you today, Mr. Erroll Holland. He's a Errol, so I could tell who you are, but why don't you give a little tidbit about who you are, brother?
Hey, how's everybody doing? First of all, I'm a teacher at Sharpstown High School. I'm a world geography teacher. I'm actually what you call social studies composite, which means that I can teach any social studies subject from 7th to 12th grade. And those subjects are economics, government, world history, U.S. history, and world geography. I also have an undergrad in business and marketing. And so I have a business background as well.
Good, man. That's what we're talking to you because on this Finally Financial Podcast, we like to talk to people who uh, have an extensive background in finance or experience, and so this is a podcast where people can get educated on different things related to finance, or come and speak and educate others. So it's good to have you on here, my brother. My name is Erik T. Jackson, and let's jump right into it, man. So I hear that you are big in commodities trading. Can you go into a little detail about what commodities are and how that works?
All right, so commodities are basically like hard assets. And so you have a variety of commodities. Commodities can range anywhere from precious metals such as gold, silver, palladium, copper, neon,
Okay.
those type of things. But you also have commodities like a lot of people don't think about or aware of, or food commodities. So your regular everyday items such as corn, wheat, palm oil, canola
Okay.
oil, all of those items, those are actually commodities as well.
Okay.
And so a lot of people, when you talk about investing, I'm sorry. Yeah, they really don't think too much about commodities because everybody's big on stocks and
Mhm.
cryptos and things like
Exactly.
that. But
Right.
commodities could actually can be a sound investment that can
Mhm.
pay off in the long run, especially during times that we're seeing like now.
Yeah, because it seems to me like commodities are things that are sort of necessary, or sort of that may not go up too high, but they won't go down too low. They're like sort of real risk averse and everyday necessary things, uh, so when you're trading or buying and trading commodities, what does that look like?
Basically, with commodities, I normally focus on gold and silver.
Okay.
The reason being is because it has what you call intrinsic value, meaning that it can be used as money,
Hmm.
but it also can be used in another way. So, for an example, silver can be a semiconductor. Certain machineries, you can actually melt silver down and use it as a conductor. The same thing with gold. So it has what you want to call a double value. And
Wow.
so one of the things about those is that historically, especially with gold and silver, historically, anytime there has been any type of inflation,
Hmm.
when economies go down, during times of war,
Hmm.
those commodities have always outperformed the stocks and bonds and treasuries and things like that. This is a historical record that they've been having on silver and gold going back about 2,000 plus years.
Hmm.
And so, especially like I say, during times as these, when you see
Yep.
inflation,
Yep.
a key thing to remember is um, when inflation, well, first of all, I'm not sure the audience is aware what inflation means. Inflation basically is like the valuing of your currency. All
Okay.
right. And so what it means is that when you see that, it's not necessarily that the price are rising, which it may seem like that, is really the purchasing power of your money or your currency that you're using is getting lower.
Okay.
And so it's like an invisible tax in a sense.
Okay.
But saying that, when you look at the dollar, let's just use the dollar for example, because we're here in the United States.
Mhm.
Um, as the dollar loses its value, items like gold and silver starts to go up. All right, because the reason why is because we have what is known as fiat currency.
Mhm.
And fiat currency is basically money that's printed out of thin air.
Right.
Is no type of financial backing. So we used to be on what is known as the gold standard.
Mhm.
So for every dollar that you had some ounces of gold to back that up.
Match it. Yep.
So what happened was during the 80s, I believe it was under Reagan, or either Reagan or Nixon, they removed us from the gold standard.
Okay.
And so the reason why our money still had value is because if they negotiated with certain countries to say that the dollar would be the world currency to back up oil.
Mhm.
All right. And so as these countries is doing deal in oil like that, that's what had the US dollar being so strong.
Okay.
All right.
Mhm.
But due to some other things that has occurred over the last few years, um, the dollar is now losing its value. And so you want to start to use what is called safe haven assets
Mhm.
uh, that'll help you protect your purchasing power. And so going back to commodities, gold and silver has been historically known to protect your purchasing power during times of inflation and economic crisis and things like that.
And those are the two main or the two best.
Those are the two best, but you also have another hard asset, which is real estate. All right.
Uh-huh.
So during inflationary times, real estate actually is a key thing to hold as well, or have money invested in. And you can have um, real estate that you actually own personally, maybe like rental properties or something like that,
Mhm.
or you can invest in what is known as REITs, REITs. It's rent,
Yes. Mhm.
yeah, real estate
Real estate investment trust. Mhm.
investment trust. Correct. You can also put money into things like that
Right.
because no matter which way the economy goes,
Mhm.
people are still going to have a place to stay.
Absolutely.
All right. And so with real estate, the value is in the materials that is built,
Mhm.
that the home or apartment is used, that they use to build it, and the land itself.
Okay.
And so during times like like economic crisis, that will still have value no matter what direction the currency goes, no
Yeah.
matter what direction, the
Yeah.
economy goes as well. So that's another one that, people can kind of look into as far as it relates to protecting their purchasing power and protecting their assets during times of inflation and economic crisis.
Okay. So speaking of purchasing power, so what give me one, maybe two ways of protecting that purchasing power.
Well, like I'm saying, gold, silver. Right now, gold is hovering around about 1,800 an ounce. All
Okay.
right. So one
Mhm.
gold card is about 1,800 an ounce.
Mhm.
And so silver is hovering around about 21 an ounce. All right.
Okay.
Um, if you continue to watch the markets, you're going to see that gold and silver is going to start to slowly increase as the currency starts to decrease. And so remember, when you talk about purchasing power is the value of your currency backed
Mhm.
by goods and services that is in the economy.
Right.
And so what that does is, for an example, all right, inflation right now, I believe is last time I checked was about 8.3%. Okay.
Okay.
So let's just say that you had uh $1,000 in the bank. All right.
Mhm.
Prior to the inflation. All right. So if you had $1,000 in the bank and then all of a sudden you get to 8.3% inflation.
Mhm.
So if you multiply that $1,000 times that 8.3, or that times, no, it should be 0.08.
Mhm.
That's going to deduct about $800 from the $1,000 that you had in the bank. So you no longer have $1,000, you now have $920.
Okay.
And so basically that erodes your purchasing power. All right,
Right.
because the
Yep.
dollar is getting weaker. So
Right.
you see it at the gas pump. You go to the gas pump, you know, it's about $4.19
Mhm.
around the city.
Mhm.
And so that means that the value of the dollar that you're using to purchase that gas has lost its power, has lost its purchasing power.
Okay.
But when you go back to gold and silver,
Mhm.
that is a universal currency. No matter what place you go on earth, you can still use that gold and that silver. It's going to be recognizable and it's still going to have its value no matter where you go.
Okay, so let me ask you this. Let's go back. So you said that gold is at 1,800 an
It's
ounce right
hovering,
now,
it's hovering around 1,800 an ounce, but
and silver is 2,100 an ounce.
no, $21 an ounce. $21
Oh,
an ounce.
so gold
Or
is $18 or 1,800.
1,800 an ounce.
Oh, okay, okay.
Yeah,
So
gold's 1,800, silver is 20
that
$21.
that's what I was
Uh,
getting at. Yeah.
so the thing about it is that as the economy continues to go south, which it
Hmm.
is,
Hmm.
all right, it's too many things in motion right now to stop it from not going south right now.
Right.
And inflation is here to stay. It's actually going to continue to go up. All
Okay.
right.
Hmm.
You will start to see a lot more individuals start to move towards gold and silver, which
Hmm.
they already are now.
I've already seen it. Yep.
And so you will continue to see the prices of those commodities go up due to
Go
the
up.
simple fact that the dollar is losing its value.
Hmm.
And
And the
so
demand for gold is
the
increasing.
correct demand for gold, demand for silver will definitely increase. So
Hmm.
a couple of economists that I follow, um, they're projecting for gold to eventually get up to maybe about somewhere between 3 to 5 thousand an ounce.
Wow.
All
Wow.
right.
So you get in now, it's a good deal.
Correct. Silver is $21 an ounce, and they're predicting that to go up to at least about 500 an ounce.
Wow. Okay.
All
So
right.
so
Go ahead.
historically, have they ever reached those levels in the past?
Oh yeah. Oh yeah. It's plenty of times that they reached those levels.
Okay.
Um, you can go back almost around the times of the Roman Empire,
Oh, okay.
during World War I, World
Mm.
War II,
Yep.
anytime Great Depression. All right,
Especially.
it's historically known that those items, along with other commodities, will still hold their value.
Okay.
Even now, perfect example, food prices. Everybody's gone to the store has noticed that food prices have increased. Okay,
Hmm. Hmm.
so with everything that's going on with the world and the economy and the whole Ukraine thing, and I'll just give you guys a financial insight on that. So basically, um, Ukraine and Russia, they make up about 30% of the world's of the whole entire world's wheat production. Okay.
Okay. Okay.
So now that you have this conflict there, Ukraine is not able to produce that wheat that it once was producing to send it to other countries that are heavily dependent upon
That week.
purchasing that wheat.
Hmm.
All right. So you're already starting to see the wheat prices or the grain prices in places like the Middle East, certain countries in Africa,
Shoot through the roof.
certain countries in Asia.
Yeah.
Their grain and wheat prices have shot through the roof.
Yeah. Yeah.
Have shot through the roof. And so people don't realize not only is those grains used for consumption of humans,
Hmm.
but they also used to feed animals.
Okay.
All right.
Yep.
So all of that plays a part in the prices that people will pay as far as it relates to the supply of that. So I'm saying all that to say that if you were to go in and started to look at some of these commodities, foods in particular, because the food prices around the world and here are going to continue to rise due to that and due to the inflation.
Yep.
So if you start to look towards purchasing commodities and food, it'll be a sound investment right now because, like I say, those prices are not about to decrease anytime soon. They're about to increase.
Yeah, yeah.
And so those are areas that people might not think about investing in, but commodities can have huge payoffs later on.
I see. I see. Yeah, man. That's nice to know, man. Because yeah, right now everybody has been, let me get stocks, let me get tech stocks, let me get this and that. And good old gold and silver is gonna always be there. And you know, when those fail, you know, they'll be there for you to rely on. And commodities other than that, like the food commodities, man, that's big. I don't think people are really, you know, they're sleeping on those, you know, like the wheat, man, come on.
Wheat, corn, beef,
Yeah,
you know, like I say, it's something that people don't, you know, that for whatever reason do not
yeah,
pay that much attention to it,
yeah.
but it can definitely have a long-term payoff.
So what about uh like natural resources, man? Like gas, you know, oil,
That's another one. Okay,
yeah,
that gas, oil, diesel,
yeah,
all of those are commodities.
yeah,
All those commodities, because
yeah.
even now, with the way things are going,
Hmm.
the gas prices are not going down anytime soon.
Yeah,
Especially here in America,
right,
due to a variety of reasons.
right.
And so, even if you were to invest some money into oil,
Hmm.
that's going to have a huge payoff. It's going to have a huge payoff, long-term investment, because, like I said, the price of oil is not going down anytime soon.
Yeah, yeah.
Um, Another thing that people might want to think about is when you're investing in commodities,
Hmm.
looking at what's going on just in the country that you might live in or just in general. So, for an example,
Hmm.
you're hearing a lot of things about going into green energy. All right.
Hmm.
And so, in order to make this green energy work, for an example, using solar panels,
Hmm.
all right, it's certain metals that solar panels need
Yep.
in order to be created.
Yep.
And so, seeing that that's something that is about to actually be in more demand over the next few years,
Hmm.
you know, you might want to look into certain metals that are needed to make those solar panels
Oh,
and
that's
invest
right.
money into that.
That's right.
Even with the battery, even not with the batteries, when you talk about going to the whole electric car thing or whatever, you
Yeah,
know,
yeah.
Teslas and there's a couple of other companies that are going into making electric cars. In order for those electric cars to function, they have to have huge batteries
Hmm.
and other metal components.
Yeah,
And so, since that's going to be in a demand,
yeah.
you know, you want to look at, okay, well, what type of metals are used to make these batteries, things and so forth. And you might
Right.
want to start looking into investing money in those areas.
Yeah,
All right.
yeah. Exactly, man. Man, this is some good stuff, man. Uh, so let's circle back around to inflation, man.
Okay.
Um, so what are some inflation beaters? Like what can we do to guard against inflation, man?
That.
Hmm.
Another one that I have a little investment in,
Hmm.
but you know, it's still it's somewhat volatile is crypto. Because
Okay.
crypto is another one.
Okay.
Bitcoin, Ethereum, Solano, you know, you have a variety of them.
Okay.
And so one of the things that people are running to is because the crypto is outside of the financial system that is controlled by the governments. And
Right.
so that is why you see certain countries. I was just watching the news the other day.
Hmm.
I believe it was either the Congo or Zimbabwe. One of those countries was switching their entire currency over to using crypto.
Oh, really?
Yeah, because like I say, Bitcoin and things like that is a universal. It's a universal financial instrument.
Okay.
And so, for an example, let's just use Zimbabwe for an example. All right, Zimbabwe's currency has been, wrecked for years now,
Hmm.
and so the averaging the dollar, $1 is probably worth about almost about 500 to 600 of their money.
Hmm.
And so, if they switch over to start using crypto,
Hmm.
now it evens the playing field because they don't necessarily have to use their currency that is inflated.
Hmm.
They can use this particular currency that pretty much everybody outside of the financial system is
Hmm.
using with crypto.
Okay.
So it kind of, in a sense, balances the playing field.
Okay.
And
Okay.
so that's another inflation beater,
Yeah.
because even if you drive around the city now, it was crazy because I went into the convenience store the other day just to pay for the gas, and they had the machine set up to buy and sell crypto, buy and sell
That's
Bitcoin.
right. I've seen that too.
Yeah,
I've seen
yes,
a Bitcoin ATM.
right,
Hmm.
right. So that's another financial instrument that can definitely help to beat inflation as well.
Wow. Wow. Hey, that's some nice information, man. Um, so on this finally financial podcast, man, I like for my guests to give a final thought, man. You know, is there anything that you haven't said that you would like to let the listeners know about regarding commodities or maybe crypto?
Well, I would definitely encourage them to start where they are.
Okay.
And so even if it's just, purchasing uh one silver coin every time you get a little money, just purchase it because you want to uh purchase it and hold on to it in a sense.
Okay.
All right, you might want to take, like the old folks used to do, stuff their money in the mattress, or
Yeah.
or put it in a drawer. Or, later on, you
Hmm.
might want to get like a little safe, or get a safety deposit box at a bank, and
Okay.
just start wherever you are, just to kind of like collect those things.
Hmm. Hmm.
And so, when those times of financial crisis come, you will have that as a safe haven asset,
Okay.
because you never want to be caught off guard with some of these things.
Right. Right.
And so, it's kind of like it's better to be over prepared than under
Yep.
prepared.
Yep.
So if
Absolutely.
you go ahead and invest that money into, like I say, just like small things like silver, put a little money in gold,
Hmm.
crypto,
Hmm.
you got the REITs and real estate
Hmm.
and things like that.
Hmm.
If you go ahead and kind of like build it inch by inch or brick by brick,
Yep.
when things start to go south, you're not rushing, or you're not anxious about what you're going to do,
Right.
because you already have that safe haven.
Hmm.
And so it's like you want to kind of be ahead of the curve.
Have a plan in
uh,
place.
and yeah, have a plan in place. Correct. Correct.
Absolutely.
You're correct. Even with the dollar, you want to have some money on hand.
Hmm.
Save as much as you can, but the reason why I say you want to have some money on hand, especially during times like this,
Hmm.
because it was crazy, because I was watching, I think it was happening in Sri Lanka. They're having some
Okay.
real bad economic issues right now.
Okay.
And so, people were going to the bank,
Yep.
and the bank was like, well, sorry, the bank's closed. So yeah, I mean, even when you think about some things that have occurred here in the US recently, remember the whole ice storm or whatever.
Yep.
You
Yep.
know, uh people trying to rush and get money out the bank and stuff like that, and
Hmm.
they had nothing on standby.
Right.
And so, you know, it's all about protecting your purchasing power. It's all about protecting yourself, your family. And like I said, the biggest thing that I can encourage you guys to do
Mhm.
is definitely start wherever you at. You know, save, 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 and
Yeah.
save some more.
Yeah. Yeah. Absolutely. And that's what I would say. You know, everybody uh, has a start somewhere. So you know, if you're gonna do it, start where you're at, and don't try and do too much. You know, do what you can do, and you know, commodities right now is probably the safest bet, the safest way to go. Commodities, if you're you know, gold and silver, if you're investing in commodities, ETFs, or like you said, REITs, if you're investing in the stock market, and then ride this wave, see where the stock market goes, see where crypto goes, and you know, just play the waiting game right now, but be safe with your money, you know. And that's the last word from uh Finally Financial Podcast with my man Erroll Holland. Appreciate you, brother. You always
Oh,
spitting good knowledge, man.
yeah, pleasure to be on. Thanks for having me.
Yes, sir.